For decades, you've been told your money is safe, that banks, the government, and the law are all here to protect your right to buy, sell, and save in private. That is the comforting, deliberate lie they want you to believe. What if the most fundamental right you possess, the right to control your own wealth, is about to be extinguished by a technology sold to you as progress and efficiency? What if the final stage of global financial control isn't a vault or a new tax law, but a single line of code? I'm talking about central bank digital currency, or CBDC, and this isn't some technical debate for economists. This is the 2026 final warning that affects every cent in your bank account, every purchase you make, and every decision you take about your future. The ultimate lesson of the CBDC agenda is this: the shift from commercial bank money to central bank money is the final stage of power consolidation. It gives the state the ultimate switch to freeze, program, and confiscate your private wealth. This is the unfiltered truth. The global strategy they are building right now, with the compliance of your own government, is designed to kill your economic privacy forever. Before we follow the paper trail that exposes the unelected architects of this digital prison, tell me, where are you watching this unfiltered truth from? Drop your city in the comments. To grasp the danger of the CBDC, you must first understand what it is not. A CBDC is not a cryptocurrency like Bitcoin. Bitcoin is decentralized and permissionless, running on a ledger that no single entity controls. A CBDC is the exact opposite. It's centralized, permissioned, and runs on a ledger entirely controlled by the Federal Reserve or the European Central Bank. A CBDC is also not the money currently in your bank account. Right now, your money is a liability of a commercial bank like JP Morgan or Wells Fargo. If that bank fails, you're only protected up to $250,000 by FDIC insurance. A CBDC would be a direct liability of the central bank. It would be the safest money, but that safety comes at the cost of absolute obedience. So why the global push for this now? It's a three-pronged attack, driven by desperation and the irresistible temptation of total control. Prong 1 is the eradication of cash. This is the first step. Physical cash is the great enemy of the central bank because it provides an escape hatch from the official system. If the Federal Reserve wants to impose deeply negative interest rates, charging you, say, 1% just to hold your own money, you could simply withdraw it as cash. Cash neutralizes that power. By systematically phasing out high-denomination notes and making cash transactions seem suspicious, they are removing your ability to dissent or save outside their control. Prong 2 is the failure of commercial banks. This is the Trojan horse. The 2008 crisis and the more recent regional bank failures showed that banks are inherently fragile. The elite will sell the CBDC as the ultimate safe harbor money that is 100% guaranteed by the state, without the risk of a bank failure. They use your desire for security to trick you into surrendering your financial sovereignty. And this brings us to prong 3, the ultimate weapon, the power of programmability. This is the final, terrifying goal and the core innovation that makes the CBDC the ultimate weapon of control. Because the money is just code, the state can attach rules directly to the currency itself. Imagine your digital money arriving with expiry dates. Use it or lose it becomes a reality, a mechanism to force consumer spending and kill your savings. Imagine targeted taxation, where a portion of your wealth is instantly hit with a negative interest rate based on policy goals. Imagine political compliance, where your money is restricted based on your environmental score or your compliance records. This system is designed to transform your absolute ownership into conditional usage. You might have the money, but the state holds the master remote control. The year 2026 is not an arbitrary date. It is the target year cited in numerous global reports for achieving the necessary technological and legal infrastructure for widespread CBDC adoption. This is a globally coordinated effort, orchestrated by the highest echelons of power. The epicenter of this coordination is the Bank for International Settlements, or BIS, in Basel, Switzerland, the central bank for central banks. Since the 2010s, the BIS has aggressively published reports and frameworks advocating for CBDCs, often focusing on their ability to improve monetary policy transmission and combat negative interest rates. They are the architects building the blueprint for your digital cage, and every major nation is now in the race. China's digital yuan is already being actively tested. The European Central Bank is preparing the digital euro, the Federal Reserve, though publicly cautious, is running intense research programs on the technical feasibility of a programmable digital dollar. This is the final stage of a multi-century struggle between the state and the individual over the control of money. The push for the CBDC might seem like a modern technological threat, but its roots are purely historical. Every time a government has sought absolute power, it has first sought absolute control over the currency. Look back to ancient Rome. The empire, facing endless wars and mounting debt, couldn't raise taxes fast enough. Their solution was to debase the currency. They mixed their silver coins, the denarii, with cheaper metals, effectively stealing a percentage of wealth from every citizen with every transaction. The coins looked the same, but their value was a lie. Sound familiar? Today, central banks achieve the same outcome, stealing the value of your dollar through inflation without ever touching a coin. The CBDC simply makes this process instant, targeted, and irreversible. But the most chilling precedent happened right here in America. The 1933 gold grab. President Roosevelt, facing the Great Depression, used a declaration of emergency to confiscate all privately held gold from American citizens, under threat of prison. The lie was that they were stopping hoarders. The truth was they were freeing the government from the gold standard's leash. They criminalized private ownership to facilitate their own spending. The CBDC is the 1933 gold grab applied to every single digital asset. They don't need to send agents door to door to seize your cash. They just need to update the smart contract on the digital ledger that holds your money. The freedom you lost in 1933 by possessing a physical asset will be lost again in 2026 by possessing a digital one. The core lesson from history is that emergency powers never retire. They are simply stored in the legal toolkit, waiting for the next crisis, whether it's a pandemic, a climate emergency, or a debt ceiling collapse, to be weaponized against your financial sovereignty. The fight against the CBDC is the defining battle for individual freedom in the 21st century. It's not about technology. It's about control. Make sure you are subscribed so you don't miss what comes next. Let us delve into the frightening mechanics of how the CBDC actually kills your private money, using concepts openly discussed by central bankers themselves. The danger lies in the concept of tokenization and programmability. 1. The end of anonymity, the financial panopticon. Cash is anonymous. CBDC is not. Every CBDC transaction is a record on a central ledger. The central bank knows who you are, where you shop, what you buy, and what you believe. This is a full financial panopticon. The lie is that your data will be protected. The truth is that the ledger is a tool of the state, available for surveillance, investigation, and ultimately, control. Shocking statistic number 1. Over 98% of global GDP is now represented by countries actively researching CBDCs, demonstrating a near-universal consensus among sovereign powers to move toward this centralized system. 2. Expiry dates and forced spending. The primary stated goal of the CBDC is to give the central bank unprecedented control over the velocity of money, how fast you spend it. If the economy stalls, the central bank needs you to spend immediately. With a CBDC, they can issue a stimulus token that automatically loses 1% of its value every month or simply expires after 90 days. Your right to save, your right to hold on to liquidity during a crisis, is technologically revoked. This is the antithesis of private sound money. It is money designed to serve the state's economic agenda, not your personal financial stability. 3. Conditional spending, the climate social score. This is the ultimate fear. The CBDC, being programmable, can enforce external policy goals directly through the currency itself. Imagine a future where your digital ID is linked to a social score or an environmental compliance quota. Your CBDC token is programmed to be valid for purchasing electric vehicle parts, but invalid for purchasing gasoline or carbon-intensive goods if you have exceeded your annual quota. This is not taxation. This is direct behavioral modification enforced at the most fundamental level of your existence, the ability to transact. The CBDC shifts the power from influencing behavior to mandating it. Shocking statistic hash. 2. The Bank for International Settlements, BUZU, has publicly published working papers detailing the use of CBDCs for enforcing macroprudential policies, which include managing credit flows to specific sectors and enforcing conditional use. 4. The structural collapse of banking. The CBDC threatens the existence of commercial banks. If citizens hold their digital money directly at the central bank, commercial banks lose their primary funding source, customer deposits. This risk creates an atmosphere of moral hazard. Commercial banks, knowing the CBDC is coming, are desperate to maintain relevance. They are throwing their resources into lobbying to be the intermediate layer between the state and the citizen, ensuring that they remain the gatekeepers even if the ultimate power shifts to the central bank. The banking industry is fighting to survive, not to protect your privacy. They only want to ensure the profits from the new surveillance state flow through their accounts. Shocking statistic number 3. The number of U.S. commercial banks has shrunk by over 50% since the 1980s, proving that the trend towards centralization and vulnerability is already deeply entrenched in the financial system. 5. The end of financial sovereignty. The final hammer blow of the CBDC is the eradication of financial sovereignty. Without the option of cash, every person is permanently integrated into the centralized system. This makes large-scale political confiscation far easier than in 1933. If a group of citizens engages in political dissent, their funds can be frozen with a simple software command, bypassing the need for warrants, courts, or due process. Shocking statistic number 4. Following the 22 Canadian protests, the government demonstrated its power to freeze funds linked to dissent, even without a formal court order. A CBDC would make this process instant, automatic, and invisible. Shocking statistic number 5. Research shows that globally, the growth of cash in circulation is rapidly decelerating, with several major European nations predicting near-zero cash usage by 2028, confirming the success of the elite's silent war. The CBDC is the convergence of financial power, surveillance technology, and historical precedent. It is the perfect tool for rulers who desire total control over the ruled. The zero cash lie is the final, most comprehensive execution of this power grab. The deadline of 2026 is approaching rapidly. The money is turning into code. The history of money teaches us that when rulers want absolute power, they must gain absolute control over the currency. The CBDC makes that control absolute, instantaneous, and irrevocable. We are required to deny that this technological marvel is a cage. We are required to deny that the lesson of 1933 that the government will criminalize your assets to achieve its goals is about to be applied to every bite of your wealth. We believe we are wiser now. We believe technology liberates us. But the CBDC proves that technology is merely a tool, and in the hands of centralized power, it becomes the ultimate instrument of financial slavery. Ponder this. Are we willingly walking into the most sophisticated financial cage ever built? Or do we fight to preserve the last bastion of our economic freedom? If you believe that this hidden war on cash must be understood by everyone, share this video widely. Expose this hidden truth to your network. And subscribe immediately so we can continue to unpack the hidden mechanisms that control your life and your wallet.